Hey guys, it's CJ Investing here. Welcome back to my channel. And today I'll be doing the top 3 stocks that you should add to your portfolio for the month of August 2023. So before I get into it, I need y'all to like if you enjoy this type of stuff. Comment, let me know your thoughts and what you're currently buying, and subscribe for more of this stuff in your algorithm. So without further ado, let's get right into it. So my number 3 is going to be Target, ticker symbol TGT, ticker symbol TGT. It was at $132.53 as of the last recording. And as you can see the chart, this is on the Yahoo Finance app, guys, if you don't know. You can see the past 6 months down 25%, past year down 20%. You know, Target has been under a lot of scrutiny in the news and different stuff like that. A lot of theft up north. As you can see, the 52-week range is near its low at 125.08. This is why I love these type of companies. They're very low in price. As you can see, it's beta, which is at 1.01, meaning it trades with the market. It's not as volatile as the market, so it's slightly more volatile in the market, but not too much. I'll show y'all that's probably because of the rapid downward moves Target has been from all of the selling pressure. But it's still at a great deal in my opinion. As you can see, the forward dividend yields at 3.25%, very healthy yield. I normally look for the 2 to 3% yield ranges for the average company. As you can see, some news up there for Target. It's in the consumer defensive sector, and the industry is discount stores, full-time employees, 440,000 full-time employees. And Target Corporation offers a general merchandise retailer in the United States. The company offers apparel for women, men, boys, girls, toddlers, and infants and newborns, as well as jewelry, accessories, and shoes. Y'all all know Target. I'm sure y'all either live near one or been to one before. So Target was incorporated in 1902 and is headquartered in Minneapolis, Minnesota. So excuse me if I mispronounce some of these words. Sometimes I get tongue-tied on some of them. But we move on to their financials, the best part. And we see their charts going like a stairway up as far as their revenues. It goes from 85 billion to 110 billion. Earnings going up as well. We go quarterly. We see they report very much earnings in 2022 of, I think that was Q2 or Q3, but nothing too concerning. We see the revenue and their gross profit. They don't have crazy margins because of the sector that they're in, but that's just to be expected. I'm sure they have higher margins than Walmart, a company like that. But their margins, their gross profit and their revenues are going up, and their basic average shares are decreasing, which is what you want to see in the market, because if they're increasing, that means they're diluting your investment and you own less and less of the company over time. So in this case, you own more of the company because they're buying back their shares. That's all that means. It's healthy, you know, for a business, as long as it could afford it. And we're about to see in a second. So total cash of $2 billion. They got plenty of cash on hand. And total assets of 53 billion. Total liabilities of 42 billion. More assets than liabilities. Great thing. Current debt, they have basically none. Long-term debt, 16 billion. They can probably pay that off about 2 to 3 years, so they're free cash flow, but we're about to see. And some of their cash that they have on hand as well. So we look at these type of things. Net income of 2.7 billion. As we can see, their free cash flow, unfortunately, there wasn't a negative They had a rough year last year, and that caused their free cash flow to be in the negative. And you know, they paid off very little debt because of that. And common stock, they purchased about $2 billion, $1 billion was in dividends paid. But I believe they'll get back to the numbers they were doing in the prior years and continue to go above that, because Target isn't going nowhere. These type of companies adjust and adapt, and they continue to improve. As you can see, it had some bad quarters in 2022, but all earnings misses do is present you with a better buying opportunity for the companies that you know and you love. So moving on to number 2 is going to be CVS Health Corporation, a company that I talk about a lot. 6 months is down 15%, year down 28%, and then it's up 12% for the past 5 years. It's at the $72 range. I've been buying this one a lot. Range from $66 low to $107 high, much closer to its low. Exactly what you want to see. Dividend yield of 3%, like I've been telling y'all, those 3%ers, great stuff. The beta's at 0.61, so not volatile at all. Stable dividend paying company, average dividend paying company. CVS Health provides health services in the United States, operates through healthcare benefits, pharmacy services, and retail LTC segment. The healthcare benefits segment offers traditional, voluntary, and consumer-directed health insurance products and related services. And this is where Siri comes in. I was talking to Siri. The company was formerly known as CVS Caremark Corporation and changed its name to CVS Health Corporation in September of 2014. CVS Health Corporation was incorporated in 1996. It's headquartered in Woonsocket, Rhode Island. I think I pronounced that right. So it's in the healthcare sector, and the industry is healthcare plans. And you know, these companies have, you know, what you want to see, the subscription fees from the healthcare plans. And healthcare is a profitable sector, more profitable than their retail side. So that's why they focus on it, if you didn't know. And this is their revenue over time. It's going up, just like Target. And they, trust me, they produce a lot of revenue, these type of companies. Quarterly, to 90 billion. And their earnings were kind of in the negative Q3 2022. Had a little rough patch, but we're not too worried about that. Still gonna be buying this one. Gross profit is going up, revenue is going up. Like I said, they got plenty of it. 200, 300 billion revenue. Basic average shares, slight increase. So that's something you might need to keep an eye on, but it's not aggressively, if you know what I'm saying, increasing their basic shares. Total assets 228, total liabilities 156. So all you need to know is their assets are more than their liabilities, which they are. Great stuff. Going on to their cash flow statements. Statement of cash flows. As we can see, plenty of free cash flow. And free cash flow is basically what cash do they have left over after they pay off their expenses and taxes and all of that other type of fun stuff. You know, how much do they have left to pay dividends and repurchase their shares of their stock and pay off their debt? So they had 13 billion as the recent quarter. They have more than enough to keep paying and increasing the dividends for many years to come. Great company. You know, number 3 in my dividend portfolio. So number 1 is going to be Realty Income, ticker symbol O. This is a company that y'all know and love. If y'all love the monthly dividends, this is the monthly dividend company. So check this out. It's at $59.22. Any time that it's under $60, you know, that presents a great buying opportunity for this REIT. A REIT is a real estate investment trust company. They buy, as it says, real estate. It's low as $55.50. So anywhere around that range, it's a buy in my opinion. Beta is 0.79, meaning it's not very volatile, but it's more volatile than CVS. Yield, very healthy yield of 5%. So you're getting a 5%er with increasing dividends, and they increase them on, I think, on a monthly basis. I know they pay dividends on a monthly basis, but I think they increase as well. Real estate sector, industry weak, of retail, only about 391 full-time employees. You know, it's called a monthly dividend company, S&P 500 company. Remember the S&P 500 dividend aristocrats. So it is a dividend aristocrat, meaning it's been paying for at least 25 years. It's been increasing its dividend for at least 25 years. And the shares, you know, 637 consecutive monthly dividends on the share of common stock. That's how many payments it has. That's pretty impressive. That's pretty great, if you ask me. It's 54-year operating history and increased the dividend 121 times since Realty Income's inception. So, very great company. You see their profit, their revenues went way up in 2022, like way up, and their earnings. So they had a great year, but overall it's been increasing. Great company. Not too much to not like about this company. Might be one you want to at least add on your watch list. You know, gross profit is going up. The revenues are going up. 1.4, 1.5, 1.9, 3 billion. That was that great year. And if you didn't know, REITs or real estate investment trust companies, they issue out shares. They issue out shares to help pay for their dividends and all of that other type of stuff. So if you see the share count going up, that's fine for REITs, because that's what they do. They issue out more shares to help pay for stuff like that. So they're the only exception for issuing out shares into the market if you see them going up. So we go to statement of cash flows. This is one of the biggest monthly paying REITs. As you see, they have plenty of free cash flow. Their dividend is real covered. It goes up to like 1.8 billion in total for the dividend. And they're paying off their debt aggressively. So that's something you want to see. That's something that we like. Yeah. And long-term debt of 15 billion. They can pay that off with, I'm sure, probably within like 5 years or something like that, of the free cash flow as well as the cash on hand. All right, guys. So that was my top 3 stocks for the month of August 2023. Hope y'all was able to gain some value out of this, maybe to help you with your decisions. Maybe it gave you something to look at, to add to your watch list, to pay attention to. But I appreciate and I love each and every one of y'all. Remember to like, comment, subscribe, and stay tuned for the next one. All right, peace.